Okay, let's talk about something that is incredibly stressful: falling behind on your bills. In the middle of all that chaos, the last thing you need is to wreck your credit, which can make a tough situation so much worse. So, this explainer is all about giving you a calm, strategic plan to protect your score when money gets tight.
And really, I just want to start by saying if you're feeling that stress right now, you are in exactly the right place. We're going to cut through the panic and give you clear, actionable steps you can take today.
All right. The first and honestly the most critical thing to understand in a financial emergency is that you have to triage your payments, just like in an emergency room. Not all bills have the same immediate power to hurt your credit score, and knowing the difference, well, that's your first line of defense. So here's the core concept. Some of your bills report your payment status to the credit bureaus almost instantly, every single month. Others, they only show up as a problem after a long delay, usually once they get sent to a collection agency. Let's break down which is which. These are your top priorities, no question. We're talking about credit cards, personal loans, car loans, basically any formal lending account. The lenders for these accounts report your payment activity every 30 days, like clockwork. So if you're late on these, it's going to damage your score right away. Now, on the other hand, you have bills for things like your power, your water, maybe a medical bill. These generally don't affect your credit score unless you stop paying for so long that the account gets sold to a collections agency. This gives you a little bit of a buffer. Now, that doesn't mean you shouldn't pay them, of course, but it means they aren't your #1 priority for credit protection. Okay, so knowing all that, let's get to the single most important action you can take. Seriously, if you can only do one thing to save your credit score when you can't afford everything, this is it. This right here is the golden rule. Even if it's just a tiny amount, making that minimum payment on your credit cards, your car loan, and your personal loans is absolutely non-negotiable for protecting your score. Let me show you exactly why.
This chart just says it all, doesn't it? Take a look at what actually makes up your credit score. See that giant slice? That is your payment history. It is the single biggest factor. I mean, nothing else even comes close. Making payments on time is the whole game.
And the penalty for messing that up is severe. Just one single payment that is 30 days late can drop an otherwise good credit score by as much as 100 points. 100! That is a massive hit that can take years, literally years, to recover from. And that's exactly why the minimum payment is so powerful. It's like a shield. As long as the lender gets that minimum amount by the due date, they have to report your account as paid as agreed. You completely avoid that devastating late payment flag on your credit report.
But what if even the minimum payments are a struggle? Okay, there is another really powerful tool you have, but, and this is a big but, it has an expiration date. That tool is proactive communication. You have to call your lenders before you miss a payment.
You know, banks and lenders actually want to help people who communicate early. So when you call them, don't just say I can't pay. Use this as your script. Ask specifically about their hardship programs. Ask if you can defer a payment, get a temporary interest reduction, or have any fees waived.
And I really cannot stress this enough. Timing is everything. These options, these lifelines really, they're almost always reserved for customers who are still in good standing. The moment your account is officially marked late, poof, most of these compassionate options just vanish.
All right, so we've covered what to do. It is just as important to cover what not to do. Because when we're under financial pressure, it is so easy to make emotional decisions that might feel good in the short term, but cause long-term financial devastation.
First and foremost, do not ignore the problem. You know, sticking your head in the sand, it doesn't make the bills go away. All it does is guarantee they'll end up in collections, which does the maximum damage to your credit and just adds a whole new layer of stress you don't need. Now this one is a really common but counterintuitive mistake. You might think, okay, I paid this card off, I should close it, right? But doing that can actually hurt your score. It messes with something called your credit utilization ratio. That's basically how much debt you have compared to your total credit limit. Keeping those accounts open, even with a zero balance, really helps that ratio. And please, whatever you do, avoid the temptation of payday loans. The incredibly high interest rates are designed to trap you in a cycle of debt. They might seem like a quick fix, but trust me, they almost always create a much bigger, much more desperate problem down the road.
So, let's kind of reframe our goal here. During a financial emergency, the objective is not perfection. It's not about avoiding any and all damage. The goal is smart, strategic survival. It's about taking control and minimizing the long-term impact as much as possible.
So here it is. Here's your checklist.
your action plan. Number 1, prioritize those minimum payments on all credit accounts. Number 2, do your absolute best to keep your card balances from creeping up. 3, communicate with your lenders before you're in trouble. And 4, do everything in your power to prevent any bill from going to collections.
And I really want to leave you with this thought. Financial emergencies, they are a part of life. They can happen to anyone at any time. But total credit destruction, that's not inevitable. That's an outcome. And the calm, strategic decisions you make today are what's going to protect your financial future tomorrow.
So, you follow the plan, you've protected your score, but what if, despite your best efforts, one of those lower priority bills, like an old medical bill or something, still ends up going to collections? What does that actually mean? And more importantly, how do you fight back? Well, we're going to cover that next.